Hi, I'm Logan Webb, Chief Investment Officer for Florida Trust, here with a brief market update. In spite of a slew of negative headlines, U.S. equities are hovering around all time highs and now on pace for four consecutive double digit years of growth. A lot of investors are surprised by this, but with the earnings growth that we've seen, that is now more robust than ever and actually broadening out, we feel that this market rally is somewhat justified and should continue from here. Interestingly, U.S. equities have actually become cheaper even as they've risen throughout 2026, and that's due to the fact that growth in earnings has been faster than the growth in the market itself. Still not cheap by any stretch of the imagination, but cheaper than where we started in 2026. Now, we certainly face headwinds as we go into the back half of the year. There's an on again, off again war that will continue to cause volatility in the markets. Fortunately, the price of oil has fallen from $120 a barrel down into the 80s, which has alleviated the inflationary pressures that we had earlier this year. Now, as the inflationary pressures subside, we've seen the probability of future rate hikes actually decrease, which is good news for the overall markets. In our view, we think the best path forward for the Federal Reserve and new chair Kevin Warsh would be to hold interest rates steady and not hike interest rates higher than where they sit today. That's a dynamic that we'll be watching very closely. Once we get to the other side of the war, which we can't predict if that will be next week, next month, or next year, and as some of those inflationary pressures are alleviated, we can get back to focusing on fundamentals, on earnings, and investing in companies that have the earnings to justify their valuation. We still believe there are very strong opportunities as we go into the second half of 2026. And that will continue to be our focus for the back half of the year and into 2027. We feel that there are opportunities around AI, the infrastructure build out that is still in the early to middle innings with plenty of runway ahead. So we're excited about the opportunities ahead, still cautiously optimistic. There will certainly be volatility along the way, but continue to stay invested and continue to talk with your portfolio manager about our ideas for the future. Thank you for tuning in. We'll talk to you soon.